Check, please.
Hey everybody, welcome back to Everything Money. I'm here with Paul. As always, we're recording from home because we got blasted with snow. Today we're talking about Disney. Paul, one of the most favorite companies in the whole world. Kids love it, adults love it. Mo is there right now in Disney, and the stock has fallen quite a bit this year. There's this turmoil with COVID and getting people into the park. So we're going to go over the financials in this video. Paul, walk us through your thoughts on Disney, whether we should or should not be investing in a company like Disney.
So I didn't even know it was down. So let's go to our 8 pillars tool right here. 8 pillars, Disney. Pull it up. 141 from a high of 203. Oh, wow. Look at that.
Look at that. Would you look at that?
Oh, wow. Would you look at that? With a low of 129. Okay. So, guys, what we're doing now, if you've watched other videos of ours, we always went through the 8 pillars, which is my screening process for looking at a stock. But now we're just starting to go right to the 8 pillars tab. But at the end of the video, Seth will explain to you how you can watch another video that explains the 8 pillars very thoroughly. So here's the, one check. Revenue growth in the last 5 years. Okay, so guys, this was drastically affected by COVID, obviously. 40% of the revenue comes from parks. Parks were shut down for a long period of time. It affected profit. Let's just go to the income statement real quick. Okay, so they're getting back to record revenue. They're going to report soon, I assume, right?
Yeah, as always, folks, stay away from trading this on earnings. You know, Paul Mo talks about in our Bid and Ask Nation, that trading tier of our community, stay away from earnings. And boy, can you imagine if you wanted to trade like something like Facebook yesterday and just lost a quarter of your stack on trading? You got to stay away from earnings. But
Unless
yes, Paul,
you were short.
I guess you're right. Go ahead, keep going, Paul.
All right, so okay, revenue's coming back up. Cash flow, let's see. Well, they still had cash flow all the way through COVID. That's pretty interesting. But their pre-COVID level of cash flow is going to take a while to get there. Yeah, that's interesting. That even in 2019, before COVID, they had a big drop in free cash flow. All right, figure out what that is. So I'm looking at the 8 pillars here. Shares outstanding, I have to think they were raising capital to fund COVID times. No, actually. A big jump right here. Was there an acquisition that was done? What did they buy that year? So let's go to the cash flow statement. Let's go to acquisitions. They didn't buy anything that year. So why did their shares outstanding skyrocket between 18 and 19? We'll have to find that out. So guys, this is what I'm saying when I say this is a screening process. This is our way of looking at a story, and the 8 pillars tells us a story. Now, these 8 pillars are kind of crappy.
Yucky. Yeah.
Right. But there's a story behind that. Why is it so yucky? Why is it so crappy? One of the most important things, they took away their dividend. They did have a dividend before. They took that away. One of the most popular aspects of the site is right here. Seth, keep it on the screen. Stock Analyzer tool. Every investment is the present value of all future cash flow. We don't know the future, so we have to make assumptions about the future. The issue with the Walt Disney Company is you're starting from a level that's actually, we probably could do it here because revenue's getting back. Let's actually try to put it in.
And Disney Plus is still growing. $4.5 billion in 2020. It made $10 billion in 2021. I'm sure people are going to keep falling in love with that.
It brought in $10 billion of revenue.
That's right, Paul.
Yeah. Okay, so let's try to put it in Stock Analyzer tool. 10-year analysis. Okay, I'm going to do revenue growth. I'm just going to remember my goal, guys, is to be conservative. Now, I get criticized for being conservative. I always put in 10% revenue growth for Facebook. Now, all of a sudden, it's not looking so conservative anymore. Now it's looking like, okay, it's probably where it might end up being for the next couple of years. But let's go to revenue growth. Let's go 3, 4.5, and 6, because Disney Plus is doing well. Profit margin. I'm going to go with 10, 11.5, and 13. Free cash flow margin, I'm going to do 8.5, 10, and 11.5. Because this Disney Plus has some really big opportunity for free cash flow growth. PE. Now, guys, ignore the current PE. It's completely biased. It's completely affected by COVID stuff. I'm ignoring it completely. Let's go 13, 15, 17, 13, 15, 17, and let's do 12.5% across the board. Because remember, guys, you can invest in an ETF and get 9 or 10%. So in order to buy an individual stock with proper margin of safety, do at least 12.5%. Hit the analyze button. Okay. I do think this is low. I think I remember looking at Disney before and doing a little more thorough and coming up with about a $80 price target for Disney where it got me interested. So again, the revenue growth is probably pretty low here. That's my biggest concern here is I'm probably being way too conservative. I actually do think I'm being way too conservative on revenue growth. So if we change this to 5, 7, and 9%, it changes things completely. Remember, guys, Disney Plus was a huge. Seth, what did Disney Plus when COVID happened? Disney Plus like skyrocketed. They got 100 million users in like months, didn't they?
Yeah, I mean they have all the. I have to remind myself they have all the X-Men film or X-Men. Listen to me, yeah, they have all the Marvel stuff, and then those stories just keep continuing with the Star Wars. I mean, every character that ever existed on a Star Wars movie, they're making a whole spin-off of it. So it's like that's just a never-ending breadbasket of money coming in. So yeah, I mean, this really got blasted in COVID, Paul.
Can you share my screen? So this is Disney Plus subscribers worldwide from the first quarter of 2020, and the first quarter of 2020 was right when COVID hit. Okay. I mean, look at this growth. This is big time growth. And they expect to be at over 230 million in the next 2 or 3 years. So guys, even though it's a cheap, $6 a month, oh my lordy. Oh, actually, I don't know how much it is. How much is it? I get it for free I signed up for like Hulu or something. I get Disney Plus for free or something like that. I don't remember what it was, but I don't pay for Disney Plus.
Yeah, that's the sneakiest subscription, Paul. When like I have it, I don't even know what I pay. I guess I don't even care. I guess at some point it's like same thing with Netflix. They might change the price, and it's just so great. I don't even read the email. You know what I mean? Just keep going with it. So
yeah, so I look at these things going. Am I willing? Even if it was $6 a month for me, I look at it going. Okay, am I going to watch 3 or 4 movies a year? Okay, it pays for itself. Fine. You know what I mean? I look at it going, it's like going to the movie theater. Yeah. You know what I mean? It's just fine for me. And I like having the entertainment options. And sometimes I just want to sit on the couch for 12 hours and do nothing. So whatever. So either way, I do think Disney is still overpriced today. Do I like it sub 100? Yes. I think I like it more on the 80 range. I think it has a lot of future prospects listen, this is a great brand. And some would argue accurately that 13 PE is probably too low for such a great moat and great brand. Like Warren Buffett would probably be paying a big premium for this. Just saying, hey, how do you get around the Disney? Go create a theme park tomorrow, a Disney theme park and studio. I'll give you $100 billion. You ain't doing it. You're just not going to be able to compete with Disney. Even if I give you $100 billion, you're not going to be able to compete with Disney. You're not going to be able to put a Disney competitor out there. That's the reason. That's the moat we talk about. So I'm being very conservative, but that's the goal here because I want to own a company like Disney forever. So I look at this saying, okay, around $80 a share, sub there, I'm probably very interested. Maybe even under 100, I don't know. But the point is, it's not near the wheelhouse right now, so I'm going to hold tight for a second.
Okay, Paul, if we jump over the charts, Mo's not with us today, but of course, if you want to trade at a quicker pace, you can join Mo in the Bidnest Nation, that trading tier. And of course, for the long-term trades, we are well below this 20% stochastic, so we need this red line turning back up. And you can day trade this as always. You can join myself, Mo, and Paul in the day trading chat, which has been on fire lately, Paul. And you can certainly day trade this to make some money. But at the moment, we're nowhere near where we need to enter for Disney. And of course, if you want this software, you can have it in the palm of your hands, in your cell phone, and be a part of our community. Paul, tell them how.
Okay. Guys, everything you see on that screen and everything you've seen is available on your mobile phone. We hired a bunch of developers because our users kept watching our videos and saying, how do I analyze stocks without waiting for you to make a video? So we created the software. It's been phenomenal. You get everything you see here on the right, 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, exclusive video content. Every day we release exclusive content in our chat up here at the right, as well as the app. And everything that's coming here, you get as part of your subscription without any extra charge. Guys, this is a no-brainer. All of this is available. The biggest thing we offer is our community, our chat community up here on the right. Over 6,000 members in there talking about their investment ideas. If you felt alone in how you looked at investing, this is your solution. Go in there, talk about everything you want, throw your ideas out there, even on stocks we don't even agree with and investments we don't agree with, like Bitcoin and Tesla. It's all available for you for $1 per day. That is it. Guys, if this makes you 1 or 2% a year or saves you 1 or 2% per year in losses, This will lead to hundreds of thousands, if not millions of dollars in gains in the future. $1 per day, 2 ways to sign up, everythingmoney.com directly or Patreon. The benefit of everythingmoney.com is we're not large enough yet to be charging sales tax, so you save the sales tax for quite a while. Either way, $1 per day, no brainer. You're locked into your price forever.
You know, Paul, it's funny. You told me just yesterday, I really am learning along with our viewers. And you told me just yesterday, we were talking about a stock like Palantir and Tattooed Chef, and you were avoiding it and getting blasted for it. And then you said something like, you know, we sort of, I'd rather avoid it and make 0% than get into something stupid and lose 80%. And it's like, man, that just like so resonates with me. So in closing with Disney is you're welcome to jump in this stock if you're an investor whenever you want. But for us as value investors, the price is just not good enough for us to become co-owners of this company. So at the moment, it's an avoid. But when it gets into our wheelhouse, we'll certainly update you. So go ahead, Paul.
The juice is not worth the squeeze.
Fondle the thumbs up, and we'll see you next video. Thanks, guys. See you, Paul.